CNBC had this big warning from the charts. If Apple goes to $100, what does it mean for the markets? Why? Why would Apple drop from $130 now down to $100? If it drops, is it a buying opportunity? Today, I'll be answering some of these questions for you. Firstly, I'll be critiquing on CNBC's rationale. I'll be showing you what I agree as well as what I disagree. The second is big problems that Apple is facing. Something that you must know if you're keen to invest into Apple. And last but not least, I'll share with you my conclusion. So if you're keen, continue watching on. Hi guys, welcome back. Now if you think I have the goods and you have something to learn from this whole discussion, smash the like button early. It helps us reach a bigger audience together, and let's get rolling. There are two reasons as to why the CNBC analyst has mentioned that Apple could get to $100. The first is that growth stocks have almost all given up their COVID gains, and some even more than that. And if Apple is a growth stock, and if that happens to Apple also, Apple could drop very well to $80 a share, which is way lower than $100. Now, where's the logic of this theory? If we see some of its closest peers in big tech space, you realize that Amazon and Alphabet have indeed given up all of their COVID gains. Right now, they have underperformed Apple massively, as shown in this chart above. Apple is the dark blue line on top. Is Apple that much more outstanding than Amazon or Alphabet, who owns Google? It's hard to justify, so we kind of categorize them all as outstanding big tech firms. Apple right now is the last beacon of hope. You know, after so much market trauma, everybody is starting to get a bit jaded. Apple is indeed the last beacon of hope. Back in April 2022, at least he had a friend in Tesla. Both of them were still positive when everyone had already crashed. But right now, Tesla is abandoning it. Tesla is minus 55% as of this time of filming. I'll comment a bit more on Tesla in the private members channel, so if you're keen, look for the links below on how to get access to it. I'll be dropping occasional insights further in that space. But back to Apple. Why is Apple so resilient? I guess a simple explanation is that Apple is right now being treated a bit like a consumer staple company. Consumer staple means that you need to use it day in and day out. Think Procter & Gamble, whereby it has all its products and tissue paper that you definitely need in good times and bad times. Apple, in my case, yes, is a B2C company, whereby the end users are indeed very sticky. Myself, I've been using since iPhone 4, and indeed customers like me are very sticky. This is unlike the big tech world, whereby many corporates are now cutting spending and laying off staff. Apple seems to be on that safe space whereby, its customers are not affected, because they are everyday people who need a smartphone. That leads to a second reason as to why this analyst is so pessimistic. He mentions that optimism is still high in the consensus rating. Out of the surveyed analysts, 37 of them are still saying Apple as a buy, which is about 80% of total analysts polled. Not just that, the average target price is $173 per share. Now, speaking to here, take target prices with a pinch of salt. But I agree also, there seems to still be optimism that is misplaced. Prices don't bottom until the last casual optimistic person gives up. That has been always how Mr. Market has reacted. So in conclusion, I agree with both of these points, and I'd like to present them also for your consideration. Before we get to the next segment, which is problems that Apple is facing, I'd like to also present our sponsor for today for your consideration. Let me introduce to you Webull. If you'd like to trade on US shares, whether it's Apple, Tesla, Google, or Amazon, do check out Webull. They charge $0 in commissions. They are one of the most competitive platforms, and not just that. Right now, there are sign-up freebies worth up to $150 if you purchase a stock, ETF, or mutual fund. Within Webull's platform, you can also find very useful tools such as these that gives you quick updates if you are an Apple shareholder. So again, look for my referral links below, and with that, I'll say a big thank you for supporting this channel also. Now back to the topic on Apple and what problems are it facing exactly. Two parts to it. The first is in demand. Take a look at this chart over here. You see that this breaks down where Apple derives its revenue. Long story short, the blue bar at the bottom is what we are going to focus, iPhone sales. You realize that that blue bar has been stagnating, correct, since 2015, hovering around $150 billion US. Now coming to here, let me ask you a question. Do you think iPhones are way better than Android phones? I don't know. I've only used iPhone. Then the second question is, who using Android phones will come and buy iPhone? Many of my friends, once they've changed and used an Android phone, they've only gone around that sphere of other phones and never came back to using Apple's products. I'm mentioning these two questions to drive home a point. Take a look at this summary table over here. You realize that revenue for iPhone jumped massively in 2021, correct? Jumping by 40%. Wow, where is this demand coming from? Are Android phone users now buying Apple products? I can't imagine that. So the question is this demand sustainable? Could it be corporates giving their employees some extra money for work from home arrangement because we had COVID, correct? But right now, that doesn't exist already. Everybody seems to be going back to offices. In any case, corporates definitely seem to be cutting back on benefits. The other question next is this pent-up demand from COVID boredom and extra cash that people had? You know, previously in 2020, 2021, we couldn't do too much of traveling, correct? There's extra budgets in the pockets. Upgrading phones, upgrading TVs are just natural. Maybe come to here if you agree, again smash the like button. But my point is that if extra cash that used to be for traveling was used to purchase products, could this also evaporate moving forward? This highlights the demand issue, or if not, a demand slowdown. But that's not the end of the problems. The next part is on supply problems. This over here is a statement by Morgan Stanley. They suspect Apple will cut iPhone shipments by an estimate of 3 million more units. In total, that's a 9 million unit drop from the previous forecast. Now, we might think that if supply drops means everybody needs to bid up for the phone, correct? But think about it a bit closer. I mean, I'm an iPhone user. If supply drops, I need to pay $2,000 for iPhone. I might finally try an Android phone. There may be a point where supply destruction has unexpectedly caused some customers to leave the ecosystem and try other products and never return. This is food for thought, but the problems don't end there. Recent updates have suggested that Foxconn, who is a supplier of Apple in the city of Zhengzhou, China, is facing problems with its production. By the way, Zhengzhou, China produces half of iPhone's total supply. They employ about 300,000 workers and it is actually called iPhone City. And in previous few weeks, there has been unrest over there because people are infected and people are unhappy about the working conditions. It is estimated to have cost Apple roughly 1 billion a week in lost iPhone sales. Yes, I do know that China is opening up right now, but the situation there is very fickle. That is why Apple has been massively investing into India and Vietnam to move away its supply chain risk. But that is a long-term solution. Current short-term problems cannot be solved fully by that. Now coming to here, I have a few conclusions to share with you, and this is definitely not financial advice. This is my perspective of things. Apple right now still sits 70% above COVID. Right now, price earnings ratio trades at 21 times. It is definitely not distressed by any measure. In fact, if you check Google is trading at 18 times price earnings ratio right now. If we see in terms of long-term history, where was Apple trading before COVID period, you realize that Apple was trading around the 15 to 18 times price earnings ratio mark. That is assuming that is normal conditions and not impacted by war, supply chain, or even the pandemic's disruptions. And if we use an in-between figure of that average of 16.5 times price earnings ratio, do you know where Apple will be priced at? Let me give you the answer. Apple will be $100 a share. Surprising? You know, markets overshoot on the way up and overshoot on the way down. This $100 a share for Apple cannot be ruled out, and share prices lower than that $100 also cannot be ruled out. And back to a question I posted right at the start of this video. Big warning from the charts. If Apple goes to $100, what does it mean for the markets? If indeed Apple drops $100, Nasdaq will definitely crack the 9,000 index level. But maybe that's actually when we start to see extreme pessimism. And maybe that could be the real buying opportunity that we've all been waiting for. As always, thank you for sticking to here. Smash the like button and check out my previous tutorials related to this. And hopefully it helps you in your investment journey. With that, I'll sign off from here. Take care as always. Goodbye.